What's Kimmy here? Who else would it be? This is the Bitcoin brief for April 28th. I hope you had a good day. Had a little bit of kind of an in-between day for the markets. We're going to discuss that. Bitcoin, Ethereum, Solana. That's typically the only things we cover in a Bitcoin brief. Half of that's probably just going to be Bitcoin of itself, just to kind of get a comprehensive look on the markets. If you are looking for the weekly time frames, that's my observations with Otsu video, which is something that I shared earlier today. Go ahead and check that out. That's the weekly for Bitcoin, Ethereum, and Solana. I actually did a series on XRP as well in that video, so go ahead and check that out. So with this here, we're going to take a look. So for today's video, we actually went bullish for the day, not by much. And so the market was hit or miss overall, but we actually had a pretty decent day overall, about a little over 1%. So nothing really major. Anything up and down under 2% is really nothing major anyway. But, people were kind of freaking out. Not as much, admittedly, as other weeks and other days, but it still is pretty stable here. And so I think what really happened was we had a pretty good day going into the day, for the first 8 hours of the 24-hour trading cycle, and then we kind of retraced that. We kind of recovered towards the end of it, but not really that well. But it still led to a decently bullish day for Bitcoin. It's better than a red day by any means. So, but we're still we're still within this level. So I'm not going to cover the weekly because we really just covered it, and the honest really just the top of the range on the daily is what we need to know about anyway. And so we're still stuck between these two ranges here. And I'm going to use a fib block to kind of show you the visuals here for this. So the top side here is 96,260. Bottom side is 91.8 or 92,000. So that's nothing's really changed. It's been like that really for the past 6 or 7 candles. I don't expect any changes really other than that until we can break one of these two levels. Now, one thing I can also show you right here is if we extend this over, this kind of hits the mid-range, okay? And so it's worth mentioning. It's not exact, but it is worth mentioning. So what could happen if we break these levels? We'll get into that here in a second, but I also want to cover the Aaron here. The Aaron gap here is about 71 to 7%, so it's about 65% on the mark. It's pretty wide for a bearish consolidation. So the fact is that we are going up in price action, but we're going down as far as the bearish consolidation. So this tends to be a little more of a divergent mentality. We tend to kind of snap back. So what I might be looking for is we might actually go up to 62,000 or 96,000, I should say. Sorry, I'm mixing my words. About 96,250, and then we kind of retrace that back maybe to the low 90s. I think that's going to probably scare a little bit of people. I've talked about this last week, that I think we will get a move to the upside, and then we'll get a retraced move, and that retraced move is where a lot of people are going to get trapped. I think a lot of particularly bears that are going to get try to short. I think this is a buy a dip market right now. I think the rest of the quarter two is going to be really, really good. I've had a few people in my group. We discussed a pretty decent conversation today about how I feel about the rest of the year, and in my my Patreon. So if you are interested in the Patreon group, go ahead and check it out. Link will be in the description. But we had a pretty good conversation about how all of us feel, and this is a great thing. Like, we talk together. This is a community, okay? This is a community. This isn't just me spouting whatever I want you to hear. This is us having conversations, and I'm willing to have conversations with you. Sometimes it's on a much more personal level. You guys can DM me, of course. That's part of the membership. But we talked about how we feel about the rest of the year and what we think. And my thought process was, I think quarter two, and I gave my reasons why, which I won't give in this video because that's meant to be exclusive. But what I am anticipating is that the quarter two is going to be pretty good. I think quarter two is going to be pretty decent. It's going to make up for a lot of what happened in Q1. I think Q3 is going to be a chop or break even at best. I don't think it's going to be a bad quarter, but I don't think it's going to be a great quarter either. I think it's going to be kind of in the middle. Mainly for those that want patience or need patience, I should say. And then quarter four is going to be the exclamation point, I think, on the markets. And so I do think the market will top out in Q1 of 2025. Okay. And it doesn't mean I think it's a recession or not. I got a video coming up about that where I kind of disagree with all the recession ideas. I think that we are going to recover here instead. So, and honestly, we already have recovered. And that's why people are going to get trapped about this. If we kind of move up, let's say, to 96,000, we don't deviate, and we come back down to the low 90s, a lot of people are going to try to activate their shorts, and it's going to be a really dumb thing because this is still support. Okay, as low as 91.8 is still support here. And so you don't want to short into support. I've been kind of mocking some people, not in a rude way necessarily, just kind of sharing my counter takes that are based off of charts and evidence from people that are just telling you to short, that were telling you to like short down here. It's just absolutely silly. So, but this is a good support zone here. This has been like this, both on the SR levels, both and the trend levels. So we'll see how this happens. Could always be wrong. I'm always open to that. I don't mind being wrong. It's just sometimes that's just the nature of it. You're always going to be wrong at some point. But the goal is try to minimize that wrongness, I guess, and try to maximize your probabilities to be correct, and more importantly, make money from being correct. So that's kind of how I'm looking at this. Basically, these two things here. And so, what happens if these levels break? So if this, we'll go to the downside here. If this level breaks here, like I'm not too interested until we break below 91.8. If we do that, now if we do that. My main level is going to be here, and the reason I think it's going to be here is, and not lower down, is because this kind of has kind of a breaker mentality, and this is actually that's pretty clean on the third day. I thought that was not as clean. Actually, it's still valid. It's not a breaker as I thought it was, but it's still very valid. So this would be the level that I'd be looking at, about 88,200. And I still think this looks pretty good. You don't want to go any lower than this because this whole level becomes a deviation. The reason it becomes a deviation is because this top here was already breached. Okay, and so this would be dangerous if it does come back down. And so I'm not concerned if it breaks below 91,000. I'm concerned if it breaks below 80. To the low side of this, which would be 87,600. I'm going all over the numbers here, so it's kind of hard to follow, so I do apologize. I'll try to be more cleaner about this in the future. But the reason is once you break this down, this whole demand structure vaporizes, right? And so that becomes a big issue. Now, if we go below 687, okay, now we can talk about going down to 70,000 again, okay? And in that case, it would be something like a trend line of this, maybe somewhere about 74. So from 70 to 75, roughly, somewhere in that range. A little too early to tell, so that's why I'm giving you kind of a guesstimate. And so you have to break through about 2 or 3 levels to do that also. So that's why I'm just kind of freestyling this. The 81,000 would 81.8 or 82,000, I should say, will also give you some trouble too. So you have. And that's the reason why I'm thinking more upside anyway, because you have a lot to go. Like if you are looking for a short in this example, and you have this level here at roughly 92,000, this level here at 88,000 roughly, and the other one down here, it was like 82 or 83. You got 3 levels to go through. That theoretically, almost always, that's not very easy to do. Okay, and so that's why. Part of finding high probability trades is to look for the path of least resistance. In this case, this would be going to the upside. Now, why do I think the upside would be going? Because we already have these levels too. Well, we've already broken down through these levels. That's why. So these levels don't have as much integrity. We had a big gap here. That's why we needed to retest this. Okay. So, but we still need to break through these. So let's go through the upside potential as well. If we can break above this zone here, really your biggest level to be concerned about is this whole level here. Once you get past about 98,000, I think getting 106 is going to be relatively easier compared to that. So, and that's probably one reason why we're stuck in this little, these levels here is because these are pretty important levels to work with. This is going to decide the overall supply or demand for really the entire range. And if you want to look at this from this standpoint, you're kind of, we are above the mid-range here. So you also have the 91 167 marker too to break down. So you have a lot to work with. We just reclaimed this for the second time. So I think this is going to be a little hard to break down. And this is why I'm favoring bullish momentum here. And so I understand people's hesitations on the market, but I don't follow my feelings. I'm sorry, I can't. My portfolio depends on that. So so anyway, that's just kind of information with Bitcoin. I'm gonna mute for about 5 seconds. Then we're gonna go to Ethereum. All right, let's go to Ethereum now. With the daily here, in particular, I looked at this midpoint structure. Really have the same situation going on. We need to break one of these two levels here, the 1865 to the upside, 1750 to the downside. This is nothing new. We've looked at this for almost the past week, so basically the same thing. Not really going to be repetitious about this. Just needs to play. Just needs to get the break of either side, much like Bitcoin will. So I'm going to just keep going here. I'm going to go to Solana now. Solana here. Actually, I forgot about this long position here that we looked at. I think these two are valid here. I'm still waiting for those two to lock in. We did talk about those in observations with O2 yesterday, and so I'm just waiting for those to trigger. And so I think I need to put my alert on there. So going back to Solana, however, this is an active trade. This was active based off of the top of this. We actually got in at the top, unfortunately. We're about 20% underwater, so not too bad, not great, but still holding here. I still think this is good because we're still holding barely above. Actually, I think we just went a little bit into this level here. We'll see where this goes. I still think this qualifies pretty well because you have this whole level that we need to break down. We need to break down below 133 or 134, I should say, if I round up. And so we'll see how that goes. We have a wide bearish consolidation here at about 65% as well. So we still could get a continued fade for the next day or two. We'll see how that goes. I'm not too concerned. I've seen these recover all the time, so we'll just kind of play it out. So anyway, that is the video. Let me know what you think. I'm happy to discuss things more. Again, observations with O2 if you want the weekly time frame. I posted that yesterday. I'm getting ready to post another video called 3 Ways to Calculate Risk. I think calculating your risk management on your charts is going to help you a lot trying to navigate through the ups and downs of your portfolio. So look forward to that here in the next few hours. So let me know what you think. I'll see you next time.